Welcome to Banking and More. Banking and More is a current affairs program where we discuss trending issues on the banking sector and finance. We try to bring the people who matter to discuss issues that matter and to try and influence policy. We are grateful that you, Dr. Albert Touna Mama, the resident representative of the IMF in Ghana, has joined us to try and throw more light on the economy, how government is responding to COVID, and what you expect of the Ghanaian economy going forward. Doc, welcome to Banking and More.
Thank you for having me, Maxwell. This was a long time coming, so I'm happy to be here.
This is a Zoom conversation that we are having with Dr. Albert Touna Mama. Dr. Albert Touna Mama, like I said, is the resident representative of the IMF in Ghana. He oversees operations of the fund and liaises with our government to see how they can run an economy that impacts lives positively. Doc, COVID is changing the way things are done. One of them is how people work. We understand the fund has had to reschedule its work procedure and get a lot of the staff to work from home. How has this impacted productivity delivery?
That's a good question about our work practice. This is an unprecedented situation, even though by now it feels like a new normal. The fund office in Ghana had to significantly change, its working habits. What we've done, or working modalities, I should say, what we've been doing since basically March 2020 is for the critical staff to work from home. So we've improved our internet infrastructure at home. And we were fortunate also to be, in an industry where we can be effective working from home. It's only for perhaps critical meetings, or high-level meetings that we do have interactions face to face. But that's perhaps how things will be going forward anyway. So that has been an adjustment for us as well.
How has this impacted output, productivity?
Yes, in terms of productivity, the interesting thing is that I think we've worked as hard as before, even harder. I think there are a couple of studies now that are going to that direction, not just for the IMF. That one feature coming from this setup where we work from home is that we end up, being in more meetings and getting a bit more things done. So this has certainly been the case for us.
One of the challenges of COVID is the strain it is having on economies. And in Ghana, we've seen it. We've seen businesses go down. We've seen people lose their jobs and all that. And this is reflected prominently in the statistical services data on the economy. We saw that the economy contracted by 3.2%. First, did this come as a surprise to you, given your forecast, given your expectations and the data you have?
The COVID has had a serious impact, and I think it's quite unprecedented that a health crisis is affecting economic activity, at least in modern economic history. And for countries like Ghana, our expectation was always that Ghana will be affected through various channels. First, by the collapse in commodity prices, oil and some other oil and gas, most notably. We've seen that gold obviously is doing pretty well, but the impact on oil has a direct bearing on government revenues. The second channel is obviously through major trade disruptions, and the third one is the measures that were put in place directly in terms of the lockdown and trying to reduce economic activity so that the spread can be brought to how can I say, slowed down, and in such a way that the government can ramp up preparation. So in that context, when you think about the lockdown, it was always expected that economic activity in the second quarter will be affected tremendously, right? And it's reflected in this number. But funny enough, I think that the number are surprising because our current forecast was that the collapse in economic activity in the second quarter will be larger than what we see. So in that context, we are currently thinking about revising perhaps upward our growth projections that currently stand at 0.9% in 2020. So there is a chance that we may revise that upward to perhaps below 2%. We need to see. So, but that's the direct implication of the release of the data by GSS, Ghana Statistical Service, yesterday.
That is positive. Is that to mean that we shouldn't expect a contraction in the third quarter, given what you are seeing relative to the data you are working with, relative to your expectations that led to the 0.9% forecast?
We don't necessarily do a quarter-to-quarter forecast. I think that what we always said, at least from March, was that we were confident that growth will remain positive this year. And I think on this front, Ghana really stand out compared to some of the countries that have contracted massively. At the same time, we also highlight the uncertainty in our projections. If you recall, we started initially by cutting growth to 1.5% in April, around the time of the RCF. And we went further to cut it to 0.9% in line with what the government is doing. So for the year as a whole, we were always forecasting a positive growth number. In terms of the third quarter of this year, given that the lockdown was how can I say, lifted before the third quarter, and that economic activity started picking up after the lockdown, and you can see that in some high frequency data. If you look, for example, at Google mobility data, this is public data available on that Google is putting out. You can see more activity in Ghana, in Accra and other urban areas on not only retail places, transport, commercial space. So there is a sense that this will be, at least the third quarter will be better than the second one. So I think this is fair to expect that, but we still need to see the data.
You mentioned earlier that you may have to revise your growth projections upwards. What are the drivers? What are the areas that you expect to drive the growth that you are foreseeing? We know about IT, what is happening there. We know about agric, which is also benefiting. We know also about the health services. But as a country, how can we maximize the gains, the projected gains from these sectors, so that it augments the negative impact that the other sectors are suffering?
You're definitely right, and I think we can see that in the numbers, that the IT sector has been, how can I say, performing really well. The agriculture sector is also doing well, and I think that they are already doing that, counterbalancing the negative impact on some other sectors. I think the current data have probably, the mining and extractive industries are not necessarily growing much, but the bulk of the growth that is expected seems to be driven basically by these two, which speaks volume to the fact that they are picking up from the collapse in tourism and some other activities. So I think this is already happening based on the data.
This is still banking and more, and we are having a discussion with the resident representative of the IMF. We are trying to understand how COVID is impacting the economy and what projections they have relative to the data that has been released by the Ghana Statistical Service. Dr. Touna Mama, one of the challenges that the pandemic is bringing is debt. because of the collapse in revenue generation mediums, countries will have to borrow more in order to fund critical expenditures, and we've seen that happen in Ghana. The challenge, however, is it has an implication on deficit, it has an implication on growth, and those are concerns that will materialize now and into the medium term. In Ghana, how should we deal with this?
These are definitely challenging times. They are for Ghana, but they are also for most countries around the world. And the economic situation that we just described earlier, of course, has a serious implication on debt accumulation, right? In a situation where government was affected without necessarily having enough buffers, enough savings. They definitely had to increase debt to respond to not only the health but also the social needs that they had to provide for the population. I mean, this is the duty of care of the government. So it's pretty clear that one legacy of the COVID situation for countries like Ghana would be a debt overhang. And the challenge, frankly, going forward is how to balance, right, restoring healthy debt metrics, healthy fiscal and debt metrics, but also keep financing the economic recovery, because this won't necessarily happen by itself. I think that there are various ways to approach this question, and something that we've been pushing in the past is to improve on domestic revenue mobilization. I think this is the most growth-friendly way to consolidate, right? And Ghana, unlike some peer countries, they have kind of a reform agenda that is there, that has a lot of upside, right? In trying to bring more tax revenues. If you recall, the way we assess debt sustainability, for example, or debt vulnerabilities, we look at a set of metrics, and the one that is really affecting Ghana or bringing Ghana to a level that is not appropriate is the fact that debt service to government revenue it's pretty high. So this is a testimony to very high debt service, but also to low domestic revenue. So basically, working on these two metrics will probably be key for Ghana to ensure that they can strike that balance between restoring healthy debt metrics, but also ensuring that the recovery is pretty smooth.
Mm. It's interesting you mentioned those two factors, and they speak to our inability to deal with them head on and resolve the challenges they bring. Take revenues, for instance. We've been talking about trying to rope in the informal sector, expanding the tax net, using all manner of means to increase revenue. But practically, we don't see it reflect in the amount we collect. What is it that we are missing? What do we need to do different in order to bridge that gap?
Yeah, it's I mean, first, the measures that need to be implemented are structural in nature. And we know by experience that it takes time, right, to change the structures. It does not happen overnight. There are a couple of avenues to think about. One is obviously tax administration, the way Ghana Revenue Authority, works in trying to collect taxes, either by using technology to ensure consistency between various tax, from VAT to income tax to other taxes. That's one avenue, improve tax administration. And there are a lot of work. There's a lot of work to be done on that front. The second one that has attracted a lot of attention, but also one that we push for, at least in the last program, was to try to reduce tax exemption or streamline tax exemption. I think, I hope, and I believe the pandemic situation has made it somewhat a priority, is that these reforms that are well known, I don't think that anyone can claim that it does not necessarily know where to look for in terms of reform. We hope that there will be a bigger impetus in tackling them going forward. And I think this is recognized. I mean, if you look at the documents, the mid-year budget documents, some of these measures are listed there, right? So that's the roadmap. It'll take time perhaps to generate some yield, but in terms of the game plan and the measures, everything is on the table of the decision makers.
On the issue of tax exemptions, it's one of the things that we committed to do under the ECF, but we haven't done it, and it's more than a year since we exited the ECF. You shouldn't be happy that that is happening, especially given the implications on revenues and given the implications on expenditure and subsequently deficit.
Look, I mean, all I can say is that there will be a bigger impetus to push for these measures. We still see that as an important reform, not least because tax expenditure, which is tax revenues that the government is not collecting because of the exemptions, it's pretty large. By some estimate, it's around 3 to 5 percentage point of GDP. That's a lot of money. We are confident that once the dust kind of settle next year, all these reforms will be looked at again, with a better sense of priority and urgency.
On the issue of expenditure, interestingly, we saw our government step up expenditure without cutting other expenditures that were contained in the budget prior to the onset of COVID. Doesn't that defeat the purpose of prudence? Because when you are faced with a disaster, you try to cut expenditures or things that weren't really emergent and then deal with the emergency, but we didn't see that happen.
I think it's not, a couple of things. My reading is that the urgency was taken care of, but at the same time, some planned expenditure were also kept in the pipeline, right? So it's not the case that, the activities that were already planned were done at the expense of the emergency. I mean, at least that's not my reading. That's the first thing. The second thing is that there are a lot of rigidities in the budget, right? So it's unclear that there is really space to cut some of these spendings, right? At least if they are spending attached to the budget, you'll have some natural attrition from the fact that for now a couple of months, some MDAs or some other institutions have not been able to go physically to the office. But in terms of the regular commitment from the government, you expect them to continue. But I think the biggest point here is that in doing that, and you also put a floor on the collapse of the economic activity, right? Because basically by still spending on capex and some other measures, de facto the government was the only activity that was still in operation, or I won't say the only, but that was an important part of the activity that was still taking place during the COVID. So to the extent that you keep some of the private sector running by doing this spending, it's very hard to blame the government, I believe, on this approach.
But at least one of the areas we could have looked at is public sector wage increment. Wages represent one of the strong, rigid expenditures. We could have at least pleaded with workers, labor, and asked them to delay their expectations and the realization of increased pay, given the circumstance. But we didn't do that.
I mean, it's a fair point to make, and but you also need to appreciate that. Sometimes I like to say the biggest stimulus from COVID, or one of the biggest, was to keep paying salaries, right? When productivity basically collapsed, because and not only productivity but also your revenue, right? So you still, as a government, still paying salaries, which means that you're injecting money despite not having the revenue to do it. My sense is that there will be not just on that issue, but more in the medium term, there will definitely be merit in having more burden sharing, reviewing perhaps the social contract to ensure that the burden is not just on future generation, because that's what debt is doing, right? Perhaps there is room to bring the burden a bit more to the current generation. I believe that this conversation can probably take place sooner, or next year.
Mm. Let's talk about the deficit. We've seen the deficit go up, projected, go up to around 11.4%, relative to the 5% maximum that the fiscal rules required, which have now since been suspended. How soon should we aim at coming within the fiscal rule requirements, given the circumstances?
I think this crisis has challenged a lot of foundations of prudent policy making, and one direct, one obvious implication of that is not only going beyond what the fiscal responsibility law is prescribing, but we've also seen that financing of the deficit by the central bank was resumed. And you have to appreciate, and I think it's perhaps more obvious when you look at more advanced countries, that there was a no regret approach to tackling this crisis, right? And this has a direct implication on the fiscal rule. I would say that it's not realistic to believe that there will be a return to the 5% next year, not least because there is a lot of uncertainty on the duration of the crisis. Some of the spending, when you look, for example, at the infrastructure, the health infrastructure that are needed to confront a similar institution, you expect that this spending will still be taking place in the future, or at least next year. But as when it comes to the exact time when there will be a need to return to the fiscal rule, it's very uncertain. What I can say is that going forward, this is part of the trade-off, right? That needs to be achieved here. Trying to return to the fiscal rule, but also doing it in a way that you allow enough space to finance economic recovery. So it's a very fine balance, and I believe that once we have a chance, perhaps in the first quarter next year, these questions will be looked again. Not us directly, but the Ghanaian authorities and just countries around the world.
I see. One of your response strategies globally was to support countries with interest-free, condition-free credit, and Ghana happened to have been a beneficiary. We got 1 billion cedis. It coincidentally is our highest in terms of benefits monetary-wise from the fund. But that came without the usual conditions that the IMF normally would accompany its credit disbursements with. But I know you are an institution that's interested in prudence, and so you want to see how the funds are utilized. Do you perchance know how those funds have been applied, and are we getting value for money?
I mean, we did an emergency financing operation in mid-April this year through what we call the rapid credit facility. If you know a little bit our facilities, this is one that has no ex-post conditionalities. We don't have targets that we need to monitor. So this is basically a one-off disbursement to address a very pressing emergency. So that's really the mindset. And in this case, the money was the objective was to deal with not only fiscal but also balance of payment pressures. And the 1 billion was released as direct budget support, which means that it went into the budget to plug the gap that was created by the collapse in revenue. So by this virtue, money is fungible, right? So what it meant is that the money really went to ensure that the government could stay current on paying salaries, paying interest. And it turned out that the government also had some social protection measures in terms of free electricity for some group of people, but also free water. But the framework to do this monitoring, in our sense, is the Public Financial Management Act, right? And Ghana, I believe, has a really strong framework in that sense. If you recall as well, this was an important milestone under the last program. The act was passed, I think, in 2016, and with a lot of technical assistance from the IMF. So it's our expectation that that framework, which is the right one, will deal with accountability of spending from the budget, because de facto that money went into the budget. It's our expectation that the audit service will do the external audit that they do of spending, not just because of COVID, but also just as they do an audit for the fiscal year. So this is the framework that is in place, and yeah, this is the framework that we see as relevant in this case.
Okay. Interestingly, you came out recently that a list of countries that benefited from this facility, some didn't have good governance structures in place to ensure that the funds were disbursed and utilized well. And coincidentally, you mentioned Ghana as one of the countries. Why wasn't this factored into the requirements at the time the letters of intent were sent out? And why is it even necessary in the first place?
I mean, it's a bit mechanical in the sense that, if you recall, the rapid credit facility for Ghana was one of the first one to be completed. It was done in record times, and if you go back to March, the onus was really on us to assist countries as fast as possible. It's just turned out that there was no framework at the time to codify these governance issues in the letter of intent. But all the cases that came after add some language relative to that. So it's just a question of timing. And I also need to again go back to the Public Financial Management Act as the framework deal with that. We also had some conversation with the Ghanaian authorities, or we're having some conversation to share, compare notes on what other countries are doing, including those that have a language in their letter of intent, just for the authorities to learn from that and perhaps go beyond the Public Financial Management Act. But I think that the minimum, the current framework, which is a good one, should apply for spending in the budget.
What are some of the lessons you are sharing with the Ghanaian authorities on this matter? What are specifically?
Countries have done various things to go beyond their existing framework. Some countries have gone as far as having agreeing to have an external audit, right, ex post of spending related to COVID. That's perhaps one thing to do. There is also on the aspect more of I should call it transparency. Perhaps try to create a portal, kind of a one-stop shop where you can account for everything that you've done related to COVID. And this is not necessarily related to the emergency financing by the IMF, but more generally, where you'll explain all the modalities. In some cases, we've seen countries where they went as far as publishing all the contracts related to COVID and provision of goods or service related to COVID. South Africa, I think, have done it, if I recall. Kenya has done it. So there is a range of options to go beyond the existing frameworks, and it's definitely our hope that some of these lessons will be used or taken on board.